Okay, so here we are. We're talking about what are leverages and lot sizes. What are leverage and lot sizes? These are some of the terms you would have heard before now when it comes to trading and the Forex market. Okay, so let's dive deep into it now. What are leverages and lot sizes? Okay, so you remember when we talked about pips, right? When you did your calculations on pip, you would have we used to talk about pip being the second decimal or the fourth decimal, depending on the number, right? Now, the same thing when you're having, let's say you buy Euro USD at this and you cash out at this. This is a sell because the cash out point is higher. This is a buy because the cash out point is higher than the entry point. Yeah. So you bought that market and the difference between this and this is on 7 pips, about 7.8 pips. When you do the movement of you're calculating your pips to the fourth decimal. So it's about 7 pips or 7.8 pips. Yeah. So now in that case of something like this now, where you have something like this as your 0.07. So instead of moving the decimals to your pip value, now the difference with that difference in 7 pips, so you could have either you're coming in with a $1 in 7 pips, how much you're going to be making. Some people coming with $10. If you're risking $10 in 7 pips in the same 0.00078 pips, you're going to be making this for $100 in the same. So you see the same number as what you got for the differences is the same value you're going to get. It's just differently because of the amount risking. Some people do $100, they make this. So if you just multiply these figures here, it will amount to something like this. Okay. So now let's go more deep. So notice where they start making money at. They started making money at. So at this point, the money was not being made. It was not really a big figure. They started from 1,000. So 1,000 gave you 1, 2, 3, gave you 7.8. Okay, 0.78 cents. Get. So if you look at it, 0.78 cents, 10,000 give you 7.8 cents, $7.8. Then 100,000 give you $78, right? There is a name for those higher numbers, these higher numbers now. So these higher numbers we're talking about is so lot size. Let's just call lot sizes. So lots refer to contract being made of a certain size. They are being purchased in bundles of units called lots. So those contracts being made of a certain size are purchased in bundles, or bundles of units, which are called lots. Now they are standardized lot sizes. So now let's go. These are the different types of lot size. So for a standard lot, you have about 100,000 units. For a mini lot, you have about 10,000 units. For a macro lot, you have about 1,000 units. For a nano lot, you have about 100 units. Okay, so let's look at it this way. So the volume of a standard lot is 1, and the volume of a mini lot is 0.10. The volume of a macro lot is 0.01, and nano lot, which is 0.001. Okay, so now for a standard lot, which has up to 100,000 units, per pip, you're making $10 per pip. Okay. Now that is on each pip, you're making $10. Why for mini lots, $1 for this as follows, right? So say how do lot size correlate to profit and losses? This is how they correlate to profit and losses because it is calculated per pip. So for each pip you make in the FX market depends on the lot sizes you're using. If you're using if you're using a one standard lot, you're multiplying 100,000 with this number, with the number of the pip that you have gained after you have gotten your pip number. That 100,000, if you're using a standard lot, you're multiplying 100,000 to that. Okay. So that is what it gives you, lot size. So if this is clear, you would know that some brokers, some brokers, if you open your MT5, you would not see a lot size as low as 0.001. So most brokers don't give up to that, but I think some do give, especially when you're trading synthetic pairs. For some pairs, they give you up to 0.00. But I think it's like 0.005 or something like that. So, but yeah, but the most they give you is from the macro lot upwards. You have the macro 0.01, the mini, and the standard. And some people use, so anything from 0.01 to 0.09 is macro. Anything from 0.1 to 0.99 is mini. Then anything from 1.0 and above, you can have one standard, you can have 100 standard, you can have 200 standard. They are all in the standard lot sizes range. Okay. So, because you would have seen some people use lot sizes as per 100, you get the lots or the volume. It's mean the same thing. Lot size and volume, they're the same thing. So you could see them use a lot size of like 100.0 or 200 lot size. Or it is all on the standard lot size. Okay. So now this is in your system. This is how it looks like. If you're using your system, the volume or the lot size will be here to show like this. So the symbol you're trading or the market you're trading is this, and either you're trading a market execution or any of the kinds of trade. We're going to talk about types of orders. I'm going to make a video on that, so you could go check out that video on what these orders look like, either market execution or limit orders or stop orders. So they are there. So we could have volumes like this. So the volume here is where you find, this is where you find the lot sizes. So you could come here and change it up to what you want. So on your phone, it looks like this. So this middle point is where you have your lot size. You could reduce it from here by clicking this point, or increase it from here by clicking, or just go straight to here and click and edit it. And when you're done, you could place your trade for either a buy or for a sell, regardless of it. All right. So this is where you find your lot sizes on your phone. So let's review that. Now, reviewing that now, we have $1 for this is this, $10 for this is this, and this. So for a macro account is 1,000, which is this. For a mini account is 10,000, which is this. And for a standard account is 100,000, which gives you this. Okay, now let's talk about leverages. Leverage. What is leverage? So when you sign up with a broker, you you'll be asked to select a certain leverage. It always looks like this: 1:100, 1:200. Okay. So what is leverage? Leverage is a strategy that allows you to use borrowed capital to increase on your potential return. So I will rephrase: leverage is a strategy that uses borrowed capital to increase potential future returns. So it's like having someone be like a standby for you. I think there's a word for it. There's someone that's going to guarantee you, yes, something like that, that's going to guarantee you that you are. Is it guarantee? No, it's not a guarantor. It's kind of like you don't have the money to. Okay, I'll give you this example. I always give this to my students. So let's say you want to get a house, and the house is for like um $100,000, and you don't have up to that. Let's say you have just about 10,000 or $20,000, and you really want to get that house. So you go meet a friend of yours who has that $100,000 to get that house. So what happens is, for your friend to give you a leverage, he kinds of buys the house for the 100,000, takes your 20,000, and gives you the house as per when you now he now holds the house for you. When you now have the money, you can now come and complete your payments and take the house, right? He is giving you a form of a leverage you get to be able to buy that property. Okay. So a leverage is using a borrowed capital to increase potential future return. So a leverage is kind of like your deposit equals to your down payment. And leverages, you could see leverages up to this, or that looks like this. Let's say, for instance, 1:200 leverage. For every $1 in your account, your broker helps you leverage $200 um, in the market. Okay, so if you're in a market of if you're registered with any broker and you choose a leverage of 1:200, what it means, if you put in your account $100, it means every $1 of that $100 that you have there simply signifies $200. So what it means is in your balance is no longer $100. Your balance would now be what? So if you multiply 100 by 200, what you're going to be getting is about $20,000. So you're now having the access to trade with $20,000 with 1:200 leverage. I don't know if it makes sense. So yeah, so I'll give you this example. So let's say you have a leverage of 1:100 and you deposited it $1,000. Now you have access to 100,000. Why is that? For every $1 here, for every $1 in this 1,000, you have it as $100. So if you multiply every 100 or every $1 as per 100, if you multiply it times 1,000 times, $100 times 1,000, multiplied by 1,000 times, it is now going to be $100,000. So that is what leverage simply means. You're using a borrowed capital. The broker is leveraging you as per helping you to be able to have access to that market. So I don't know if this makes sense. If it makes sense, you let me know. So for now, this is what leverage means, and that is what lot sizes means. You could go ahead to, I have some questions here. You could go ahead to answer these questions. Yeah, these questions. And if it makes sense to you, you can pause the video at this point, answer these questions. If you don't still understand what the answer is, go back, take this video back and watch it again. Okay? So for now, if you're not yet subscribed, please do well to subscribe. Turn on your bell notification so you'll be aware or you'll be the first to know when I post a new video. See you guys in the next video.